Hello and welcome. My name's Chris Cann with Mining Journal, and with me I have Hayden Locke, President and Chief Executive of copper development group Marimaca, focused on their namesake asset in Chile. We've got Hayden for a series of interviews diving deeper into Marimaca and the copper industry in general. Today we're focused primarily on the ESG or sustainability piece. Welcome, Hayden.
Thanks, Chris.
Sustainability, ESG, has become obviously exponentially more important over the past 5 or 10 years, whether it be for a regulatory perspective, from a permitting perspective, which is part of that, and investors are more focused these days as well. Where you sit with Marimaca has some natural advantages in terms of its profile. Can we start by looking at the emissions landscape for just for a starter?
Yeah, we did a review on the back of our PEA with Wood Mac just around particularly carbon emissions, because there's been a changing landscape, and obviously decarbonisation is becoming a much bigger focal point for industry, and we thought it would be important back then that we were positioning ourselves with that in mind for the future, because we have a view that if carbon taxes do come into force in any meaningful way, that positioning yourself as a low carbon producer will bring an economic benefit. So we've been thinking about it for a while. One of the benefits of an SX-EW project is it's naturally lower carbon intensity than a like-for-like concentration project where you have to ship the concentrate and then smelt it, which is a quite greenhouse gas emissive process. So in general, Marimaca is well positioned. Low strip ratio, meaning less diesel per tonne of material moved to get the copper to the back end of the project, which is great. And then obviously using the electricity, which is renewable in the area that we are, the Atacama Desert, means that we would expect to be at the lower end. There are always areas of improvement, and we are debating the trade-off between capital cost and reducing carbon emissions further, and the economic rationale for doing that, because at the end of the day, we do want to build a sustainable mine, but we still have to make economically rational decisions in building that sustainable mine. We can't just throw caution to the wind and blow up shareholders' money. So that's our philosophy internally, and we see some opportunities to further improve it. And I think in the fullness of time, we could see Marimaca being a net zero mine. Probably not true net zero, but certainly with offsets, it could be a net zero mine.
Okay. You talked about the SX-EW process. Obviously in Chile, well, maybe not obviously to everyone, but in Chile, the renewable power situation is probably one of the best in the world. So it's a bit of a free kick for Marimaca in those senses. It's naturally going to be lower emissive. What's management doing to actually show its intent that it wants to bring that profile down? You talked about that being the mood amongst the executive team and the board. What's demonstrably happening to show investors and stakeholders?
Yeah. So the biggest area where we still have significant carbon emissions is on our use of diesel-powered fleet. Okay. And particularly around the mining fleet and around the fleet to move the ripios, the spent ore off the leach pads and into the waste dumps. So in both of those in the PEA, we've got diesel-powered fleet. So the obvious thing to do there is to electrify that fleet. Now, there are many examples of electrified fleet in both cases and we will almost certainly consider the electrification of the fleet to lift off the ripios and lay the material onto the heap leach pads, because that does make operational sense for us. Where we're on the fence a little bit is on how much we electrify our mining fleet, because that tends to require quite a lot of infrastructure and tends to work better with very, very large scale, very, very long-lived mines, large iron ore mines as an example, where they have enormous fleet, 100-year mine lives, and they can really benefit from having that infrastructure built up front. So what I would say is there is an argument certainly for trolley-assisted fleet, and there are some great examples of mines that have used hybrid diesel-powered, electric-powered fleet to reduce the energy consumption, particularly as they drive out of the pit. And we're considering that, and we'll hopefully visit some mines who have implemented that technology to see how well it works from an operational perspective. But again, we are looking for ways to improve further improve our already incredible, we expect to be bottom decile, bottom 10% in terms of emissions per pound of copper produced, to reduce that even further. But as I say, we will consider both the operating and economic impact of every decision we make. If it's on the fence, then we'll always go for the sustainable option.
Okay. As much as electricity or power is probably the free kick for Marimaca in Chile, the hurdle that any developer has to face in Chile is water, particularly in the foothills or in the Atacama region. What's happening in terms of managing that risk and showing stakeholders that you understand the challenge there and that you're doing something about it?
That was the biggest risk we identified for the project development 3 years ago. And 3 years ago, if you'd asked me, as we did in a previous interview, what I thought the biggest risk for this project was, I would have said water. And so our focus has really been on how do we mitigate that risk, and we think we've already done that. As you say, Atacama region, if you look at Chile as a whole, about 5% of water usage in Chile goes to the mining industry, which is relatively high. If you go to the Atacama region, which is naturally water stressed, that's more like 50%, which is, there is no doubt that is completely unsustainable. And so 3 years ago, I had the discussion with the board, and the board agreed that was by far the biggest risk. And if we were relying on a fresh water source to build and permit our mine, that we would have no chance. And so we started looking at alternatives. There is a long track record of using salt or seawater in heap leach projects in this part of Chile. And in fact, there are some concentrate projects that use seawater as well. So the obvious thing to do is to do all of our met testing with seawater. And then the question becomes, well, do you use seawater that we extract ourselves, or do we go and look for an alternative source of seawater? And so what we've done is we've signed an option agreement with a local power producer to recycle seawater that they have used in their industrial processes, which would otherwise be pumped back into the ocean. And we're going to use that for our project. That has multiple benefits. Number one, less discharge back into the natural environment. We're helping a local business on a small scale relative to how much water they extract, deal with an industrial waste solution, and it also completely removes that water risk for us as a company. So we feel very comfortable with that side of the business now, and we're focused on the other aspects of ESG.
We've talked previously about the permitting, and as part of that, the community engagement. You're obviously closely engaged as well with other stakeholders, including your investors. When you're having those conversations and sustainability comes up, what are the concerns that people are bringing to you? What are the things that other people see as potential risks or sustainability challenges for Marimaca in building this mine?
I think the answer is people recognise that Marimaca is significantly lower on the risk spectrum than just about every other project from a sustainability perspective. We are in an area of extremely low biodiversity. It's not to say that there's none, and I don't wish to diminish the risks associated with building a large-scale project, but we're not in the middle of a jungle. We're not in an area of incredibly high rainfall. We're not in a food bowl. We're not next to a river that feeds both irrigation and drinking water for large-scale populations down the valley. So really it's been pretty low in terms of the amount of questions that we get around that. Of course, they ask the question, what are the things that you're concerned about? And we run through, well, we've done the analysis and we think we're at the lower end of the risk spectrum, but we still have to design a project where we're going to make sure that there are no spillages of anything into the surrounding environment, that we are managing water resources if they exist, that we are ensuring that biodiversity is retained, and we're not unduly impacting that. But I think everybody's pretty comfortable now that Marimaca is certainly one of the better positioned projects from a development perspective.
ESG obviously stands environment, social and governance. Very little time is spent on the G. What does it look like corporately from your exposure to capital markets, to regulatory environments, in terms of providing that governance element to the ESG story? And for you, how has it changed over the past 2 or 3 or 5, 10-year kind of profiles in terms of the expectations and the things that you have to have in place to ensure proper governance as a listed company?
Yeah, so we've had a big discussion about this, and it's about, and the other challenging part for junior mining in particular is making sure you have a fit for purpose, as to describe it, fit for purpose ESG regime, because I can't remember how many ESG frameworks there are that you could spend millions of dollars a year trying to address all of the ESG risks that you face. And as a small company, that's a challenge. So our board has said it's a key focus for us. So we have an ESG committee, and they have asked us to identify the risks that we have as a company for this phase of development. And one of the tools that we're using in order to help us manage that, because we just don't have the money or the time to build out a huge ESG team yet, is what we're calling the Digby assessment. So they provide a framework that allows us to go through and using their experience of what the important policies and regulatory frameworks are, use it as a scorecard for ourselves to identify areas of obvious risk that we can address. And as a company, we go, okay, what can we address quite easily? And we address that immediately. What requires more thinking in terms of managing our budget? And then we put it into the budget. And then what things should we be looking at when we get into production and we have a bit more money to be able to address these risks further? So it is an iterative process, and it's constantly ongoing, and it's never ending.
Hayden, as discussed, we are going to get into other elements of Marimaca, the project and the company, in other interviews, but on sustainability, we're going to leave it there. Thanks for your time.
Thanks.